Hey y'all, it's Dr. Know-It-All. The Q1 Tesla earnings report was chock full of amazing stuff. I'm going to go through that, but first, a little teeny pat on the shoulder or something, I don't know. Little smile on my face. Anyway, today we sold our Mazda CX-5. I've mentioned that before because we purchased the Tesla Model 3, which is shown in the image here that we have. And so now we have gone completely off of gas anything. So we have no more gas engines at the house. We have like all battery operated yard equipment. We have heat pumps at the house. We don't have, any kind of forced air gas furnaces or anything like that. And now, of course, we have two cars that are battery electric vehicles. So, I was feeling pretty good about myself. And then if you notice up here, we have a like from Elon Musk, which, kind of made my evening. So anyway, just wanted to mention that fast. So thank you to the Tesla team and to Elon Musk for making cars that are so irresistible that we just have to have two instead of one now. All right, so let's turn to the Q1 earnings report. I'm going to start with the highlights. This is just a rundown of the stuff that I saw, read, heard, etc. So it's going to be, kind of rough and tumble, so just accept that. But anyway, let's start with the profitability. They had 11.4% operating margin in Q1 of 2023. If you look back to Q4 of 2022, it was 16%. And for the year, it was 16.8%, I believe, for all of 2022. So obviously, operating margins have gone down significantly. I'm crossing my fingers. It looks like it's going to happen that Tesla stock will take a big tumble tomorrow because of that one number. Everything else looks fantastic, but that number is going to get on people's cases, and I have some money, so I will be purchasing Tesla stock tomorrow, assuming that it does go down like I expect it to. So anyway, then we've also got $2.7 billion in GAAP operating income in Q1, $2.5 billion in GAAP net income, $2.9 billion in non-GAAP net income, operating cash flow of $2.5 billion, free cash flow of $400 million in Q1, and $200 million increase in their cash and investments in Q1 to $22.4 billion. So don't worry if their operating margins have come down. That was kind of to be expected. We're going to talk about that more because Elon and Zach and others talked about operating margins and what they're really trying to do. So stay tuned for that. And then the last thing that's really cool is operations. The Cybertruck factory tooling is on track, producing alpha versions. And if you go check out Tasmanian, you will see some pictures of the Cybertruck production line. So it's real. It's a real truck. They're actually making it, which is amazing. And then two other statistics that are incredible. Model Y was the best-selling vehicle, not EV, vehicle in Europe in Q1. And Model Y was the best-selling vehicle in the United States in Q1, excluding pickup trucks like the F-150. So in other words, aside from the reduction in the operating margin, everything is looking hunky-dory for Tesla. All right, so earnings call. Elon Musk started us out as per usual. He said that he began kind of starting off with they're going to harvest their debt margin with full self-driving / autonomy. So what he means by that is if we dial this back up again, remember we're looking at 11.4% operating margin versus 16% plus in the past. And so they've got a reduced operating margin, but what he's basically saying is, and he says this later, he says Tesla is a unique company in that it can capture value post-sale on a vehicle. So you sell a vehicle like, GM, Ford, Toyota, whoever sells a vehicle, that's what they get. In fact, they sell it to the dealership and then the dealership can mark it up or something. So at the point that they sell it to the dealership in wholesale, that's all they're ever going to get out of that car. That's basically all they get. And then hopefully they'll be able to manufacture parts and they'll be able to sell those parts into the supply chain and make some money post-sale on that. But Tesla is in a unique position because what they can do with autonomy and with other things, Zach later on talks about supercharging and things like that they can capture more value after the point of sale, which means that even if they've got lower operating margins, they can make that up over time. And so it really doesn't matter that much. In other words, lower operating margins now, but get money later. That's what he said, basically. Then, as I said earlier, we've got really good news about the Cybertruck. It is in alpha production, so they're working on production prototyping, things like that. And so they're really working on this. They've got a production line working. First deliveries in Q3, there will be a delivery event, and it sounds like they may not actually specify pricing until the delivery event or maybe very shortly before that. But Elon did warn that it's an S curve in terms of production. So the first part is going to be very slow. This is a totally new vehicle that they're building. It's not like the Model Y on top of the Model 3, which was like, oh, we basically are just making another Model 3, but we're expanding it and stuff. So it's easier to do. They're building something brand spanking new here. So he's like, it's going to take a while to ramp. But then he said 2024 should start into the steep part of that curve. And then they should be able to really eat into the demand for the Cybertruck, which I expect will grow over time because as people see them on the roads, they're going to be like, I want one of those too. Next up, I found this really interesting. They expect their stationary storage growth to exceed vehicle growth. And that does make some kind of sense because, of course, stationary storage starts at a smaller baseline, so it's got more room to grow. But basically, that means Megapacks and Powerwalls, they expect to grow rapidly in 2023 and into 2024. Next up, he talked about autonomy and full self-driving. He said that they've got 150 million miles of full self-driving beta driving, and it's growing exponentially. So don't forget, we're talking about this. This is the 150, and it's going to get steeper and steeper and steeper. So every day, every month, every year, the next 150 million miles of full self-driving beta will not take nearly as long as the previous one. And then the next 150 million after that will take an even shorter time. So we're looking at a ramp that's going very, very fast. Elon, of course, mentions they have a huge data advantage. And he said they're improving their neural network training capabilities. And I think what he meant is the hardware, because he says that they've purchased a lot of NVIDIA GPUs. So I don't know, he didn't specify what a lot was, but it's a lot. And they've also got Dojo, which could be an order of magnitude of improvement in cost of training. In other words, less energy, faster, you're getting more compute for your buck. And he reiterated that they might eventually be able to sell Dojo services just like Amazon Web Services is sold. Now, later on, he talks more about Dojo, so stay tuned for that. But that's what he talked about in his initial summary. And then for anyone who hasn't been paying attention, they are going to make and sell as many cars as they can. There is an uncertain economic environment, and that's to put it mildly, but their plan is to increase their lead further. So they're going to keep trimming costs as much as they can, as long as they have a healthy margin. They're going to trim costs in order to make it more affordable and continue to sell every possible car that they can in order to grow so that they can make more cars and they can reduce the cost even more and they can sell more cars. So that's their project for the next 5 or 10 years or something. They're just going to keep cranking out and selling as many cars as they possibly can. Margins be damned. Then Zach Kirkhorn came on and he said he had 3 points. Number 1 was operating and gross margins have reduced sequentially, but they remain at healthy levels. They are doing aggressive price cuts. He said that they have some one-time expenses like warranty items for old S and X's, increased deferred revenue for autopilot because they've changed the model of how they do it. And so what they're doing is they're spreading out the amount of time in which they're allowed to count full self-driving revenue. So anyway, all of those things are kind of one-time costs and general costs that have reduced their operating margins. It sounds like he's kind of saying temporarily it might go back up again, but then again, they've also aggressively price cut in April. I think 2 times or 3 times they've cut pretty much across the board again. So the operating margins might hover around the low double digits or even dip into the single digits. And of course, as expected, he said they have more cars in transit because they're trying to not have these giant pushes at the end of each quarter anymore. And he said S and X was particularly affected by that because they're being shipped overseas now for the first time. And of course, the Texas and Berlin are margin headwinds, though they are improving. In other words, it costs a lot to build a car right now at those factories because they're still so new. There's not that many cars. But he did say that they are seeing commodity cost reductions being realized. So in other words, ordering a lot of stuff, building a lot of stuff, the parts that they need are becoming commoditized, and so they're able to get those for lower prices. So that is a nice benefit. Next up, Zach reiterated what Elon had said, and that is that their storage systems, the Powerwalls and Megapacks, are really starting to take shape. In other words, their strategy is starting to pay off. They're generating a higher percent of the total business versus the automobiles and more profit too. And he said eventually Powerwalls and Megapacks will actually be more gigawatt hours than the cars. In other words, they may not produce as much money, but there will be more batteries in those solutions than there will be in the actual automobiles. So that's a pretty mind-blowing thing when you think about it. That means that these things are going to be very important to Tesla/TSLA going forward. And third, again, kind of reiterating what Elon had already said, their plan is to grow volume in cars and storage as quickly and as possible. Sacrifice the margins for growth. That's the basic idea. Don't worry about margins as long as they're healthy, as long as they're positive, basically. Just keep trying to grow market share, sell more and more and more of this stuff. So in other words, keep the company financially healthy, but not seek maximum profits. And then we got to the question and answer portion, which actually turned out to be quite interesting. I usually find them a little bit boring, but everybody was in good form today. So we can start off with Drew Baglino, who talked about batteries. He said that the 4680 batteries, when they are ramped up, are going to be 70% lower cost than traditional NMC batteries. He said the Corpus Christi lithium refining factory will break ground in May. They're working on zero water cathode. That's in pre-production right now. The cathode is being built in Austin as well. They're expecting to have something out of that factory by the end of the year. And he also expects that structural battery packs will have a 50% lower CapEx, in other words, capital expenditure, and also a 66% lower factory footprint. So these are gigantic numbers we're talking about. And it means that the 4680, even though it sounds like there's still a ways to go, they were a little bit hedging their bets about all of this stuff. They said that they're committed to the idea of structural packs. They're committed to the idea of the 4680, but they're not there yet, basically. So I think it's ramped a little bit slower than they've expected, but they're really, really committed to making it happen. And finally, and importantly, they're very committed to reducing the costs and increasing the efficiency before the Cybertruck introduction. Then they were asked about demand, and Elon said that the orders of their cars are in excess of their production. So in other words, they're selling every car they make. Interestingly enough, somebody asked about Cybertruck pricing, and Elon said that they are going to wait until the handover at the end of Q3 to introduce pricing. So all of us with Cybertruck pre-orders are just going to have to wait and see how much we're going to have to pay for these Cybertrucks. Interestingly enough, Elon said this is a Hall of Famer. It only comes along once in a great while. He is super pumped about the Cybertruck. Then Elon was asked about the full self-driving take rate. He said that's very tricky to price because there's so many variables, but he said the autonomous car value is enormous. It's basically a massive, massive possibility if it does come true. And he said that while there's 2 steps forward, 1 step back kind of stuff, the trend is clearly towards full self-driving true autonomy. And he said this, I hate to say this, but we'll do it this year, which actually so happens to align with my thinking as well. But of course, Elon would know a heck of a lot better than me whether it was going to be possible this year or not. So again, I know he's predicted this in the past, but it's good to hear him reiterate that he thinks that they'll reach full self-driving, as good as or better than human driving by the end of 2023. Next up, a call to refine lithium. So if you want to start a lithium factory, you should do that. Elon and Zach, and I think Drew Baglino also, they were like, listen, we're not doing this because we want to. We're not refining lithium because we want to, but because we have to. So if somebody else wants to do it, we'll be happy to let them do it and we'll buy from them. And here we get another really, really bullish sign here. In talking about hardware 3 and autonomy, Elon said, we believe, so he did qualify this, that hardware 3 will reach true autonomy and be a robotaxi. So my thinking has been that they will not allow these cars to become robotaxis with hardware 3. This goes counter to that. So I really, really hope that's true. And I hope that hardware 3 is good enough to be able to allow these cars to drive completely on their own without any humans in the driver's seat at all. When asked about the economy, Elon's talked about how the interest rate increase is effectively a price increase because most people finance their cars. So if the interest rate goes up, then effectively you're paying more per month, and that's all that really, really matters to people. And I've said this in a previous video. In fact, I think just the one that I released this morning, I talked about how even though our loan for our Tesla Model 3 is smaller than it was for our Model Y, because of the interest rates being higher, we're actually paying $50 more per month than we are for our Model Y. So it's a huge, huge increase, and it's really, really important. So he also talked about how more economic uncertainty causes people to be more hesitant about buying cars. So, he's saying like, hopefully the Fed and other people will get in there and help the macro, but in the meantime, they're willing to cut prices to continue to grow the brand and to sell more cars. This next one is really cool. They talked about how Dojo is a long shot bet. In other words, they're making something, they don't know if it's going to work or be better than the competition, but if it pays off, it'll pay off in a very big way. And Elon said to the tune of multi-hundreds of billions of dollars in potential outcome. So that's huge. They're really, really really thinking that maybe they're going to become like Amazon Web Services. They could eventually become Dojo AI services or something. So if this pays off and if it works, it's not just going to help Tesla internally to train their vehicles and get closer and closer to full self-driving. It also could be a gigantic revenue generator from them. So keep an eye on this space. A quick note on heat pumps for homes and commercial over time. Elon is like, yeah, we really want to do that, but right now it's a background item. We have too many other things going on. So hopefully we'll get heat pumps sometime in the future from Tesla. Next up, in case you haven't heard enough about autonomy yet, Elon Musk is very excited about autonomy. That was my big takeaway from this earnings call. He said this software update that would enable robotaxi would be the biggest asset value increase in history. In other words, your car could go from being worth $40,000 to being worth $100,000 overnight, just like that, right? So if you have full self-driving and you get robotaxi enabled, suddenly your car can make money and the value of that vehicle rapidly increases because people would want to buy it at that point, right? It's like, oh, I can make money with that car, so I'll pay you to get the car so that I can then make money off that. So the car suddenly becomes a value add instead of a depreciating asset. So yeah, Elon is pumped about this, and so am I after listening to the earnings call. Next up, they talked about how Tesla has the best real-time data except in SpaceX and Starlink. That pretty much was the one exception. And so essentially what he's saying is, as opposed to other companies, particularly auto manufacturers, they have to wait for the government to process titles, for the dealers to tell them what they've sold, et cetera, et cetera. So they have this huge amount of latency built, and they don't actually know how many cars they're selling on any given day or week or even month. But what do you have with Tesla? Because they know when the car is sold, like literally since Tesla is selling the car, they know instantly. And so therefore they can adjust the prices. And you've seen this recently, and I predicted this, that they were going to adjust on almost a daily basis. They go up and down to adjust demand. And so Elon said that what they're looking for is a clearing price. They're basically looking for exactly the price that sells all of the cars that they're manufacturing. And they can just tweak that by hundreds of dollars at a time, super small refining things, or they can go big jumps and they can reduce the Model 3 standard range to $39,990, which is what it is right now. So they can make these adjustments because they have big operating margins and they have a huge amount of clarity with no latency about what exactly is happening and how their prices are affecting the way that people are buying their cars. And Elon said, we do dumb things, but we want to be less dumb than the rest of the industry. When asked about market share, Elon said that they should talk about all cars, not just EVs. So he's saying like Tesla is big enough now. He's like, basically EVs are going to be the market in a few years. So just talk about market share. Don't talk about EV market share. So that's a really interesting thing. And then he said that they have a shot at 2 million produced this year. So they're still thinking they could do that if everything goes well, but they're comfortable with 1.8 million vehicles produced. An interesting addendum on the supercharging front is that 60% of all superchargers in Europe are open to all EVs with no increase in wait times. So that's really, really remarkable. And that shows that they're very carefully and strategically opening up the ones that are less busy, obviously, but also they're able to map around this and figure out traffic patterns and stuff like that. So this is pretty cool to see. Can't wait till more of these come into the United States, and especially some V4 superchargers in the US too. So when asked about margins, Elon and Zach both said that they're optimistic about the middle of this year and next year, but that margins only matter in terms of investing into 2024 and 2025. In other words, they don't care if they're only making 2 or 3% operating margins, as long as they have money to put into building the next factories, doing the research they need to, all of that kind of thing. And they said they're in the best possible position for difficult times, which puts them in a way better position than almost any other auto manufacturer. Next, they circled back again on low initial margins, but they can get more revenue later from things like full self-driving, supercharging, etc. And Elon again said that the monthly payment is a limiting factor for people purchasing cars, and that higher interest rates reduces people's ability to be able to purchase cars. He did, however, say that Tesla is in a uniquely strong strategic position in this uncertain economy because they make cars that can sell for zero profit and then yield back tremendous economics in the future. And of course, most of this potential captured value comes from autonomy. And as I said, there are so much hinges on autonomy. And of course, as I noted earlier, we could actually have a car that goes from being a depreciating asset to being worth more in the future now than it is. This is backwards from the way that pretty much all cars work right now. And of course, Zach put in that they have service and charging and insurance as well. But autonomy is the big ticket item. It's the kind of thing where people will get it if it works well enough. So the take rate is going to increase over time as full self-driving gets better. And it means that they can basically sell their cars at zero profit or even a small loss and still make it up in autonomous software and other things. And speaking of price cuts, they were asked if the cuts were calculated to catalyze Darwinian forces, which I thought was really nicely put. Sorry, I don't remember which analyst actually asked that question. But anyway, the question was asked. The answer was even more interesting. It's not a deliberate, attack on these other companies. They don't think about them too much, which is really, really funny. In fact, what they ask is, do people like our cars? Can they afford our cars? And can we improve service on our cars? And that is pretty amazing stuff. So it means Tesla really isn't even ultimately paying attention to the competition. They're just trying to do the best job they possibly can on their own. And even more so, Elon said that they really want all EV manufacturers to succeed. And they've done things like opening up all of their superchargers to all different manufacturers and also open sourcing their patents to help their competitors because they want people to succeed. So it's a very different sort of competitive landscape than most companies think about. And you have to approve of Tesla for doing that. They really want the rising tide to lift all boats in the EV race. Then Elon was asked a really interesting thing. He was asked if there was a limit to direct selling vehicles. In other words, would they need dealerships? And Elon Musk and the whole team sounded like they kind of laughed at that one. Elon said it seems to be working well so far and kind of laughed about that whole thing. He said basically the problem for everybody else is the dealership model is it's difficult to match exponentials. In other words, it's hard to match up what's going on altogether. And then Elon went on to talk about misalignment of incentives, that dealers basically want people to come back for service because that's how they make most of their money, but that basically Tesla is able to get feedback from service, from accidents. Anytime anything goes wrong with the car, they get immediate feedback and they can understand that. And their alignment, what they really want is for people not to come in. Customers don't want to come in for service, and Tesla doesn't want them to come in for service, especially if it's under warranty, because then it just costs Tesla money. So Tesla and the consumer are much more aligned. Nobody wants service, and that means that they work really, really hard to make their car better to repair and to not need it. As Elon says, the best service is no service. In other words, the car doesn't break. And finally, Elon repeated the story of how newcomers in the auto industry aren't able to succeed because incumbents have a massive stable of old cars that need parts and things. And that's how they make their money. They sell those parts at exorbitant rates, and therefore they make all this money. So even if they sell their car at a very small profit margin, in 5 or 7 or 10 years, those cars are going to need repairs. When you bring them in, they charge you a whole bunch of money for those repairs, and that's how these people make their money. But there's like a 5 to 10 year gap in which you don't make any money from parts because it's still under warranty and things aren't breaking. So you need to be, it's the chicken and egg problem. You need to have existed for 10 years, but at the same time, you can't have existed for 10 years if you're a new car company. So Elon says that absent electric vehicles, absent the electric vehicle motor and autonomy, he doesn't see newcomer vehicle manufacturers succeeding. All right, that's a whole bunch of stuff and a long video. Without further ado, I will let you all go. Please do like the video so other people can find it. And of course, consider subscribing for more of this kind of content. And in the meantime, I will see you in the next one. Bye-bye.